Hello everyone, today's video is all about structural and buildings allowances. So basically this is tax relief on a commercial building. So rewind years ago in the UK, there used to be tax relief available for commercial buildings. It was called IBA, Industrial Buildings Allowances, and then that policy fell out of favor with the government. They said, you know what, we're not going to give people tax relief on buying the shell of a building, but we will give them tax relief on what they kitted out with. So plant and machinery, fixtures and fittings, that sort of thing. And then fast forward to about 2019, where the government had a change of thinking, or different government obviously to the ones that had in the IBAs decades ago. And the government said, look, no, we will give tax relief for people who buy or construct non-residential buildings for use in their business. And this relief that they brought in is called SBA, Structural and Buildings Allowances. Now the SBA basically says you can write off the cost of the building over a generation, roughly. Delving a little bit deeper into the detail, what that means is over 33 and a third years. So you can write off the cost 3% a year against your taxable profits, whether they be corporation tax if the building is owned by a company, or income tax if you own the commercial building as an individual. So 3% of the cost of the construction or purchase of that building is written off every year. Now remember, this is in addition to the capital allowances. So all of the things like the plant and machinery that you kitted out with, all the stuff that's inside the building, you get extra tax relief on that. But the actual shell of the building itself is now subject to this structural buildings allowance, where the whole cost can be written off, but over a generation. So what has to happen is when you create, when you buy one of these things, say you've constructed it, and you have to create what's called an allowance statement. So it's just a document that sets out details of the building, where it is, type of building, the address, what's it used for, when it first came on stream, as it were, where you first started using it for business purposes, when it was built, because that piece of paper then gets transferred to the buyer should you ever sell the building within that 33 and a third years. So in the lifetime of this allowance statement, because obviously what happens is the government doesn't allow you to double dip to say, well, okay, so let's say you've had 20 years and then you sell it, and then the next guy, he can get his 33 to 30 years. That's not how it works. So if you've had your 20 years, you sell it after 20, the guy who you've sold it to, he can get 13 and a third, i.e. the balance up to the 33 and a third years. But you have to give him that piece of paper, the allowance statement, so we can see what's going on. So he says, right, so this is the cost that you spent 20 years ago. This is the date. So then you work out that he's got X number of years left to claim on that same rate, that 3% of the cost price. So a little bit of paperwork, but it's not too onerous. You can literally draw one of these things up yourself. This so-called allowance statement, which is also for not only for when you sell it, if you do sell it, but also for if HMRC open up an inquiry and say, well, look, can you just show that you've got the right paperwork? So at the point of you acquiring the building or constructing it, just put together one of these allowance statements, which just sets out all the facts and the dates and the costs. So anything else on SBA? Oh yeah, the thing is the quid pro quo of getting, if you will, this tax relief against corporation tax and income tax is that it will reduce the it will increase the capital gains tax if you come to sell the property. So in other words, let's say you've claimed several £1,000s over 20 years, coming back to that example of 20 years, and what happens is when you sell the building, the structural buildings allowances that you've had for 20 years will get added on to the sales proceeds to increase the capital gains tax. And the government says, well, that's only fair because you've had all this tax write down for so many years, but actually you're getting a gain on this thing, potentially. So we'll add that relief that you've had for all those years on top of the sales proceeds. So it will increase a potential capital gain when you sell the property by virtue of claiming this SBA, which is kind of intuitive. That kind of makes sense. Now, I would suspect that property